We- Hey guys, just a quick check. Can you guys see me and can you guys hear me clearly? Testing, testing. 1, 2, 3. Yes. Okay. Wait. Give me a moment. Let me see if you guys can see my screen. Let me just share my screen. Okay, just to test. Can you guys see my screen? The slide on trading in low volatility environments. Can I get a thumbs up? All right. Okay. Okay, so let's start. Oh, let's switch to. Okay, let's start our webinar. All right, sorry for the delay. So today's webinar, we'll be going through trading in low volatility environments and how to trade in sideways markets. All right, so just a disclaimer before we start the webinar. So everything in this webinar is educational in nature and nothing should be construed as investment or trading advice. All right, so please do your own due diligence before you guys trade. Okay, so I'm your host for today. My name is Woon Hong. All right, and we'll be going through this agenda. All right, so firstly, we need to understand what is low volatility markets and what actually causes these sideways markets. All right, and also next I'll be going through trading strategies for sideways price action, such as range trading and breakout trading. All right, then the third thing is identifying support and resistance levels in low volatility conditions. And also lastly, how you can use technical indicators such as Bollinger Bands to navigate these low volatility periods. All right, so just a very simple breakdown of what is low volatility markets, also known as your consolidation phase, right? So this is caused by central bank policies, which leading to stable interest rates. So whenever you see such news such as like the bank decided to the Feds actually decided to maintain interest rates, then you can see that such news will not affect the market much, right? But if the news come out as either there's a decrease or there's a increase by 0.25% in interest rates, then you will see huge candles. All right. So the next thing is lack of significant news events. So when you see that sometimes, right, there are bank holidays or you're not in session and there aren't any news events that causes the markets to move very quickly, right? This will cause low volatility movements, right? Let me see, let me show you guys a quick example of low volatility movements. Let me just use my screen. Okay. Okay, so this is a quick breakdown of your let me show you guys an example. Okay, so if you were to look right here, let's see, Forex factory. Let's see if there are any news. Let's go and filter this right here. We only want to see the red folded news, right? So Wednesday, CPI, GBP CPI should be already over. GBP CPI. Okay, so GBP, we are looking at GBP right now. Let's go to H1. So 2 hours ago, we had the GBP news, right? Which is this candle. Oh, my screen. Wait, just 1 sec. Okay. Yeah, GBP news. Oh, screen haven't changed. Wait, let me see. Oh, this. Can you see? Is it showing the, all right, okay, okay. Okay, so we have the GBP CPI 2 hours ago. All right. So this is what I mean by, okay, let's see on 15 minutes. Maybe 15 minutes. Yeah. 15 minutes. Yeah. Okay, 3 o'clock is when the news happened, right? So we can see, you can see even on 30 minutes, this is your range, right? This is what we call a range, low volatility, because if you see right here, 8 a.m., right? 8 a.m. Singapore time, right? All the way until 3 p.m., right? You can see price is ranging because we don't have any news and we are not in session, right? This could be Asian session, right? But usually for Asian session, right, price will tend to range. Or you can see right here, 7 a.m. we took out this high right here, and then price started to reach, right? Then we have the GBP news. So GBP news, it was positive, right? So GBP USD, GBP JPY should have broken out of this range, right? So this is what we call low volatility markets, sideways markets, right? Here is another example of sideways markets, right? You identify a range. Usually what we call this is basically you have your range right here. Once you can trade the breakout, and then if there is another range, right, it can possibly break out towards the upside or the downside. And in this case, it broke out towards the downside. All right. So actually, a lot of people like they usually trade. Let's say we are on 30 minutes, right? Some people they like to trade within a range because they know that okay, this is a pretty safe range because we know that price will bounce between this resistance and support level, right? So they take scalps, right? But some people they will wait patiently for a breakout, right? This is what we call the breakout trading. Okay, so if I were to go back to the slides right here, let me show you guys. Okay, if we were to go back to the slides right here, let me show you guys the session timings. Okay, so this is very important because for myself, I only trade during London and New York session. And how can you find this FX market time zone converter? Just go to babypips.com. All right, I'll type it in the chat box below, babypips.com. Then you search for market time zone convert. Sorry, you just search for session timings. All right, babypips.com session timings. All right, so this will help you to know which timings are the most volatile. You can see right here, trading volume is usually high at this time of the day, right? So from here, you can see London. If you were to look at London, all right, this area, you just align it, okay? It will show you that it's very volatile during this timing. All right, so this, and there are specific strategies such as opening range breakout. You can search for this type of strategies. It's called opening ORB, opening range breakout. Then we also have what do you call it? The ICT. What is that model called? ICT silver bullet, I think. Example of strategies for specific time zones. Okay, so this, if you look in the chat box below, right, you can see that I've typed out two different strategies for specific session timings. All right, so ORB is for Asian timings, and for ICT, we can do it in either London or New York session. All right, so if you have the time, you can explore these two strategies, which are very specific for can't see anything you type of. Oh, can you see? Okay, let me see. Oh, yeah, it's because of the settings. Give me a second. Okay. Oh, daily tips. Let me just type it out again. Session timings. Daily tips session timings. And then ORB, opening range breakout. ICT. Examples of strategies for specific time zones. Okay, so can see, just to make sure can see, you might want to note down this because I think Zoom cannot copy and paste, right? So yeah, the session timings, right, which is the one that I show on the slide, is basically the one right here, right? It shows you the volatile session timings. So it's very extremely useful. All right, then for ORB and ICT silver bullet, those are the very specific ones. ORB is for Asian session, right? And ICT silver bullet is for London. And there's another one for New York, right? But you can do it on your own research. Let me know if you guys want me to go through this review maybe another time for another topic, right? Okay, so these are just certain examples that you guys can explore. Okay, so moving on, right? So let's see, let me just minimize this. Okay, so just very simple steps for range trading, right? So firstly is to identify clear support and resistance levels to define the range, right? So for example, your buy strategy, enter near your support levels with stop loss below the support, not at the support level, but slightly below the support, and your TP will be targeting slightly below the resistance level, right? Vice versa for the sell strategy. Very simple stuff, right? But you need to understand that sometimes the con of trading in a range in a range is because you have fake outs, right? These fake outs can either be good for you or bad for you. All right, so let me just show you guys. Okay, so if you were to, oh, am I sharing this? Okay, if you were to look here, right, range trading. If you were to trade within a range, why some people avoid trading in a range, right? It's because even though we have like, maybe we can scalp 20 pips fast game, we can do something like this. You can take a long position right here, your stop loss placed below here to scalp towards this area, right? 1:3. But if you realize, right, there are a lot of times where in a range, you don't know where to put your stop loss, right? Let's say you do something like this, right? Um, where is my box? Yeah. Okay, something like this, right? Yeah. In this situation, you can only catch like 17 pips, and you have to wait how long? Like 3 hours for 17 pips, which is kind of ridiculous if you ask me, right? So in such range trading, right? I rather trade the big breakout. In if you ask me, if I prefer range trading, like trade within a range. Okay, for example, like range trading can also be something like this, right? Let me show you guys. Uh, where's my parallel channel? Yep, this one, something like this, right? Let me extend it. Right, this is something that you can trade also. It doesn't necessarily have to be like a horizontal kind of box, right? It can also be this, right? Some people like to trade this pattern where basically we have a very strong push downwards, right? This is your very strong push. Okay, then it start to consolidate around this area, trading within the range, and then after that it breaks out, right? A lot of people like to trade this kind of strategy, right? You wait for it to break out, retest this area, and then you start to sell, right? Everything is lined up. If I were to show you on the H1 time frame, oh, where did it go? Yeah. If I were to show you on the H1 time frame, right? You can try to find these kind of setups, right? It happens a lot. So essentially what we have is a downward movement, right? And then price start to consolidate, and then it breaks out of here. Then if I were to draw this, oh, let me just label this as consolidation. Okay, so this blue box is the consolidation. Okay, then if you ask me, where should you enter? Right, should you enter right when it breaks out, or should you wait for the retest? Right, always wait for the retest. All right, because if you were to just trade the breakout, right, price can easily go back into the range and do something like this, right? Imagine if price didn't continue downwards, price go back in and go up, right? It's not very often that such things happen, right? But there are quite a few times whereby price just go back into the range and didn't sell off, right? Then you are already in a huge drawdown, right? Because if you were to enter right after the breakout, if you enter right after the breakout, stop loss placed above here, right? It went in your favor, right? But imagine if price didn't go in your favor, right? You'll be in drawdown for about 20 plus pips, which is not very ideal. Okay, so but there are pros and cons, right? If you were to wait for this, if you were to wait for the pullback right here, right? This pullback wasn't very obvious. It actually pulled back into the FVG only. If you see right here, H1. Let me show you guys. Right at this area, when H1 candle closed, right? There was a FVG right here. Okay, fair value gap, there was a fair value gap right here. And that's why if you were to look in the next candle, right, price tapped the fair value gap and broke out of there, right? That's why if you were to look for either this pullback into this range, right, you can also see if there are any imbalances which are fair value gaps here. So you can be very what do you call it? What's that word? You can be very versatile, right? You know that either price will react to this FVG, right? Or the range. Okay, so this is just very, very simple tips for you guys. So if you see such setups, right, I recommend to trade the breakouts, right? Sideways markets, and then we trade the breakouts. That is one very effective way to practice. Okay, breakout, and then once we have either a fair value gap or price will tend to react to this candle over here, which is basically once we see a very big push downwards, which is a bearish engulfing candle, we will look at the candle before that to see whether it's a last upward movement. If it is a last bullish candle before this bearish candle, then we'll mark this out as our so-called, some people call it order block, some people call it just a demand zone, right? But I'll just make it simple for you guys. Just call it a point of interest, right? So yeah, let me just take this out. Okay. Yeah. This could be a point of interest, meaning that price can possibly come up here, tap this area, and continue downwards. Right? Okay. Or another situation is where we have your fair value gap, which is right here. And then I'm sure some people have this question, right? If you have a fair value gap and then you have a order block right here, which should you enter, right? Yeah, if I have these two, right? Honestly, I'll just take the one closest, which is your FVG, right? Because in this area, but some people, where is my sell? Okay, short position, right? You can take here and your stop loss place above, right here. Some people can place here to make you feel safer, but I would say just place slightly above here. Because if price were to just break above these two areas, right, most likely it will just go in the opposite direction already. So there's no point risking so many pips, right? Okay, or another method is for you to cut your position into two, right? So basically you have one position here, okay, which is like 0.5%, all right, and another position here. Okay, so this helps you to I would say is more of doing different positions to make you have a better edge in the market. So this is what usually I do. I'll just have one position here. If it fails, right, never mind. I still have the other 0.5% to enter the trade. So this is just how you manage your trade. Yeah, so at this point in time, anybody have any questions so far? Just wanted to be sure if everybody is on track, right? If it's good, can I get a thumbs up? Everybody okay? Everybody okay? Might be a bit to take in, but I hope it's useful for you guys. Okay, then let me move on. Okay, then the next thing is, okay, moving up back to the slide. Okay, we go through breakout. Okay, so, yeah. So for breakout, we identify the consolidating range. You look for candlestick closure above or below the range. All right, then we wait for pullback, and then we do the trade continuation. So it's exactly what I said just now. Very simple stuff. Safest way is to wait for pullback. The more aggressive way is to enter once it has a candle closure above or below the range. If you are buying, then of course you are waiting for the candlesticks to close above the range. Then if you are selling, right, you want the candlestick to close below the range. Okay, then your stop loss, always put it slightly above or slightly outside the range. Okay, don't put it at the end of the range, right? Because there are a lot of times where price will just tap your range and hit your stop loss. Okay. Okay, so simple stuff. How you can identify your support and resistance levels. Look for horizontal levels where price repeatedly bounce off, right? Use previous lows and highs as reference points. Then also confirm your indicators with like pivot points or Fibo retracements. Okay, the most important thing, right, is to pay close attention to recent price action in low volatility markets for clearer levels. Okay, so let me just show you what I usually do. Okay, let me see. Okay, back to the charts. Right, can you guys see my screen, the charting screen? Okay, is it? Yeah, it should show, right? Right. Can see? Okay, just need to make sure you guys can see. Okay, let me just clear this for a bit. Okay, so there is one trick that I usually do, right? Let me just show you guys. Eh, okay, let me just mark this out. Um, where is my 1 hour chart? Let me go to 15 minutes and find some setups. Let me try to find a more relevant one. Mm, which one? Oh, GU don't seem to consolidate as much. EU consolidate more. compared to GU. Let me see, like GJ. Because the only pairs that I trade are like EU, GU, GJ, Go. That's all. Okay, let's take a look at this. Okay, you see such little choppy movements right here. It's like price just don't want to break out this range, right? So you see right here, such range, like let's say we already have a strong push upwards, and then you are looking for, okay, let me show you the step-by-step basis. Yeah, so it can go both ways, right? It can go either like this. Let's say you're expecting this, right? Because firstly we are above this Ichimoku cloud, meaning that we are bullish, right? So the next thing we are expecting is for the breakout here, right? But price decided to break out towards the downside, which is here, right? So at this point, you know that there might be a possibility that price will want to break out this range, right? So if you look at this range, you see how many times it bounced? One, or not even one. So many times, right? Here, 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 this area, right? So you can confirm that this is your range. So which is the high you should take? Just put it at the wick over here, and then here is your lowest wick, right? So in this area, this is your range. Let me just put it here. Okay, this is your range. This was your range technically, right? So you can see right here, price haven't broke out. Then once price breaks out, right, you are waiting for it to tap into this range. You are waiting for it to tap into this range again. Okay, so once it tap, just enter a short position. Okay, stop loss above, slightly above this range. Okay, and also if you notice, okay, let me see if you guys know. So if you notice, what else can we see in this range apart from the pullback? Just now, just one thing to hint you a bit. What else can we see here? Which pairs recommend for sideways strategy? I recommend GJ, right? GJ, yeah. Okay, you see, correct. Even though we have FVG, okay, wait, I take out this for a bit. Even though we have a FVG here, right? But remember, because we are on the lower time frame, we are on 15-minute time frame. 15-minute, we can have a lot of FVG, right? It's not accurate, okay? And FVGs don't work on like every other pair, right? So this is not as effective, okay? But what we need to know is, remember, the most important thing is bearish engulfing candle. Correct, we have a bearish engulfing candle which closed below the range. Okay, so that is step one. Second step, price close back into the range. Okay, and then what do we have next? We have the green candle before the bearish engulfing candle. So we have this green candle. Okay, so what you are supposed to do is to mark out this candle. This is your area. If you really want to snipe, this is your area that you're looking at. for me, right, I like to just set and forget. So I just enter when it taps into the zone, right? Price looks weak, I just put it here, 31 pips, and I just target the body of the next of the previous low, right? This is what I usually do. Don't target the leg right here, the wick, right? Even though you have a better R, but usually I just target the body of the candle right here, right? The previous low. So even though my RR is not that good, like 1:1:1.33, but it takes out a lot of how to say, like I don't have to monitor as much, I don't have to worry, right? Even if price goes against me, it's okay. I can always find another trade, right? So it's more of your psychology, right? It helps with your psychology. Which pairs recommend for sideways strategy? Okay, I would say for me, I like to trade GJ. I don't know why a lot of people don't really like to trade GJ, but GJ is like it's a pair that moves extremely fast when doing session timings, right? Like 4 p.m., you can, like, if you were to see, even though this is like super early, uh, Asian timing lah, right? Asian timing, we have this area. That's why we only caught like maybe, mm, we only caught like okay, decent enough. If you were like me, right, I only target to this low. This low is about 60 pips, right? 60 pips, yeah, 60 pips that you catch as compared to, let's say, this session timing 4 p.m. Yeah, wow, if you catch this, is crazy. Yeah, you can see how volatile GJ moves, right? It's pretty wow. Like how GJ moves and stuff like that. It's quite amazing. That you can see right here, if let's say you were to enter something like this, right? Let me try to find a higher time frame. Yeah, very, very simple stuff. Let's say you have a level of resistance here, right? Level of resistance here, right? You can see not very clear on 30 minutes. Yeah. Okay. Oh. There you can see right here. You can see how it reacts. Take the high. Take the high. This is the highest point, right? Take the highest point. Then lowest point. Lowest point is not here, it's here. Okay, so once it breaks out of this zone, just wait for it to tap back in, right? Wait for it to, what time is this? Oh, but it's not really a time that I would trade. Because you see right here, 1:30 a.m., right? It start to consolidate. If I were to show you the baby pips session timing. Oops. Baby pips session timing. Yeah, this one Forex market hours. Okay, see, same thing. This AM. Yep, this is AM. Closed. New York session closed. Very low volatility from 1 a.m. onwards. From 2 a.m. onwards, volatility start to drop. You can see right here, it starts to drop. So right here, that's why we have consolidation. That's why I say session timings is very, very important. Usually session timing, Asian session is 8 to about volatile period, maybe 7:30. I would say 7:30. Okay, 8 a.m. 8 a.m. all the way until like maybe um 11 Yeah, 8 a.m. to 11 is where you should look for setups. If you can't find any setups, then just ignore it, right? Then for London, London is usually from 3 o'clock. Yeah, 3:30 or 4 o'clock, then it starts to become very volatile. And then for New York session, you can start it from 9:30 or 10 p.m., right? Can always follow here. If I were to convert this for my Western friends, so first we use 1 hour chart to find S and L. What is S and L? Oh, S and R. All right. Okay. Yep. So usually what I do is I go to the, because 15 minute is where you can see all these candles, right? If let's say I were to go to H1, H1 is not very clear. H1 is not super clear, right? H1 sometimes is not very clear. But if you are experienced enough, you can tell with one glance, like something like this, like all these small choppy movements, like something like this, right? Something like this, all these small movements that you can tell straight away one, right? You can tell straight away these are choppy movements. Yeah, these are choppy movements. So just one tip, H1, what I like to do is I like to find all these mini candles, all these small candles, small candles, right? And then after that we have a big candle, right? So this is one example. This is another example. This is another example. Small candles, big candle. Small candles, big candle. Small candles, big candle. Yeah. But usually what I do, yeah, is to find the small candles. Yeah. So yeah, if I were to look at the live markets, right now we don't have anything, right? If I were to show you guys, maybe USD JPY, yeah, all of it are kind of not in the range now. They are moving properly. Eh, these are fine. These are fine. Yeah, maybe because we are in session right now. Um, yeah. So usually I use 15 minutes to find entry zones. Yeah, that's my max. I won't go to 5 minutes. Um, I used to go to 5 minutes, right? That was when I realized I failed to understand properly that 5 minutes is super choppy and not very useful. I understand that some people want to snipe, like a lot of people want to have like zero drawdown or that kind of thing, right? But for me, it hurts your psychology if like you're trading on 5 minute time frames because it's very choppy. You don't know what to look at, and yeah, I prefer to trade on 15 minutes. Like it's so much better, and it just gets rid of a lot of noise, right? 15 minutes only for your entry, right? Um, if you can find a nice setup, of course, right? Like something like this, UJ, you we have a very strong push upwards, then you mark out the range, right? Highest point is here, lowest point is here. Okay, wait for it to break out. Okay, once price is here, you wait for it to break out. Then you know that, okay, what should you look at? We have a bullish engulfing candle. Okay, let me just mark it. Okay, let's say you are right here. Okay, then what should you look at, right? The main thing you should look at is, okay, we have a candle closure above the range. That is one thing. The second thing, that's the first one, right? The second thing is for you to mark out this red candle, okay? Because once we have a bullish engulfing candle, the candle before that should be, what we are looking for is a bearish candle, right? So once we have a bearish candle, this is your buy zone. Okay, so wait. green. Okay, so this is your buy zone. Okay, so you are aiming something like that, right? You can put it at the candle body. Sometimes, yeah, sometimes you can draw it something like that. But for me, usually I just take the whole candle, then I target. Then you're asking where should you target? If the left side, price already break out the left side, right? So the target should be here, this area. Right? This is your targeting from a range to another range, right? So if you enter here, 1 is to 1.61 only. So you are waiting for it to tap back into this area. So let me see. Okay. Oh. Okay, let's see when price taps back in, haven't tapped. Okay, right here is where it tapped. Haven't tapped all the way. You see here? Haven't tapped, haven't tapped. Here is where it tapped into this green zone. Okay, then we see how it goes. We see the next candle, right? Tap and bounce. Right here, right here. Yeah. Then is when, then don't be greedy. I know that sometimes, you might want to target this area also, right? I mean, it's possible to target this area, but um, right, a lot of times where I rather you hit your TP rather than price maybe stop at here and then go back down, right? You know what I mean? But if it doesn't retrace the range, yes, yes, that is the sad part of trading. A lot of times, if it miss, it just miss, right? I know sometimes, okay, how about let's see which works better for you, right? You have the option to trade once it breaks out. Okay, so when it breaks out, only valid for first, second retest. Yes, only the first retest. Always the first retest only. Once, let's say, it taps into your zone, right? That's a very good question. I like that question. Okay, so once it taps into your zone, right? If it comes back down and taps into your zone again, don't enter, okay? Don't enter, right? Because usually what works best for me is that the moment it taps into the range and then it flies, right? That is when you can catch a trade. If it comes back into the same area that you marked out, don't enter already, right? That is a mistake that a lot of people do. Okay, I like that question. It's very, very valid. Yeah, so try it out. If let's say you have a candle closure, you can choose to enter, right? And then see how it goes. Or you can wait for the pullback into this area. I know that this one is a little bit more complicated because firstly, you're waiting for it to come back into this another point of interest within the range, right? Then you have your stops right outside. So sometimes it misses, but these are I would say A plus setups, right? Compared to if you just enter after the candle closure. Let's say you don't have all this, right? You just enter here. It's possible, but if you were to look at it, right, your target is here. You have a negative, not say negative, but it's below 1:1 RR. I won't even take this trade unless your target is here. Then you can take the trade. What we are doing is we are refining the trade to make it have a better RR. Right? I hope that answers your question. Okay. Then the next thing I want to go through, right, is actually Yes. Okay. The next thing that I want to go through is I would say, okay, let's maybe instead of Bollinger Bands, um okay, we don't need stochastic. We don't need stochastic. Let me show you guys a cheat code. I'm not sure if this works for other pairs, but let me show you guys a cheat code. Maybe you guys can have maybe you guys will find this interesting. I'm not sure if you guys have tried this before, but okay, let's off this. Then we change this to 200 EMA. Okay, 200 EMA. Okay, we don't want RSI. What we want is the pivot point. A pivot levels. Is it called pivot level? Okay, let me show you guys a cheat code. Pivot color. Yes. Oh, resistance color red, pivot color blue, support color green. Okay, let me show you guys a cheat code. Okay, if we are on, this is for gold. Okay, if you guys are free, you can always try this. You can always try this method. Okay, so wait, let me see. Let me do a quick check. Forgot which time frame. Wait a minute. Let me just do a quick check. Sorry, yeah. Okay. Yeah, 5 minutes. Then yeah, this is correct. 5 minutes. Wait, let me see. My pivot point looks a bit weird. Wait, let me sorry, let me just go through. Okay. Wow, right now this thing is not okay. I wanted to share with you guys this indicator, right? Firstly, EMA 200 moving average, right? We are above the moving average. So in simple terms, if we are above the moving average, then we are only looking for buys, right? That is the technical part of it. Okay, so then for this, what is this pivot levels? So the main thing about these pivot levels is if price comes here, comes down, and closes above, we can take buys, right? We can take buys for this trade. But right now, it's a bit far from the pivot level, so I can't really show you guys a perfect example. But yeah, if you maybe if you have a chance, use this one, Ukuta Labs pivot levels, okay, and then you can test it out, right? See how it works. Okay, so this is just one of the what do you call that? I would say it's one of the indicators you can trade. It'll tell you whenever it comes to this pivot level, right? It shows that there are lesser volatility. Then when it breaks up, then it's high volatility. Yes, easy then Fibo. Yeah, Fibo is a little bit more complicated, I would say. Okay, let me show you guys. Can use on all time frame. Yes. Yes, this one can use on all time frame. But what I recommend, right, Cleon, for use for gold on 5 minute. Yeah, use for gold on 5 minute time frame. Yeah, then another one that I wanted to show you guys is called ATR. I'm not sure if you guys understand what is ATR. So, oh, this is ugly, not this one. ATR. Okay, ATR, average volatility, average true range. But I'm trying to find the one that is like the one that where is it? There is this very, very useful average. Is it this one? Okay, wait, it's too many things. Why isn't it appearing? Yeah. Um, Not this one. There's this true. Not this one. Oh, it might be this. Oh, it's not this one. It's a more visual one. It looks like this, but it's something more visual. Wait, give me a moment, Let me try to find it. It's a very, very useful it's a very, very useful indicator. Why only set up buy in the middle pivot, not the bottom? Why only set up buy in the middle pivot, not the bottom? Middle pivot. Oh, because the bottom is basically like a support range already. If it falls to the bottom, I mean, you can buy also, right? You can buy at that level, but most of the time when what I realized, right, if you let me just find it. If you buy at that the pivot, there's resistance and there's support level, right? Usually when sometimes you buy at the support level, it will fall to a lower support level. Yeah, so I rather enter at the pivot level. It's much easier. Right. Let me just find the ATR. Yeah, has risk. Please let it be this one. Not this one. No, it's not of this. There is this amazing ATR, right? If I have a chance to find for you guys, I'll find it. But we don't really have much time. It's basically, if you can explore yourself, right? It's basically indicator that will appear below this level, right? It shows you different candlesticks, different columns, right? On the volatility. Sorry, my drawing a bit is not very good, but okay, so it has like different colors. Okay, so then the one with the highest point is usually the purple color, I think, or red colored ones. The low volatility is yellow. So is ATR is basically where you should either exit or trade, either it allows you to understand where you should exit your trade, where you should enter, right? It helps you to practice a lot. Yeah. But if you just follow the session markets and also target the recent swing high, swing lows, right? I think it's good enough already for a start. Okay. Yeah. Wait, let me just show you guys the last part. which is this, right? So this is additional technical indicators to navigate low volatility. So ATR, RSI, and moving average. Moving average usually I use some people like to use 50, 100, 200, right? These three combo, but I feel 200 EMA is already enough, right? 200 EMA is enough. Yeah. And usually MA has like this, has this, is a lagging indicator lah. Yeah, but RSI is more reliable, and also maybe ATR, but ATR needs quite a bit of practice. Yeah. But don't worry, YouTube has a lot of info on ATR, right? So ATR, RSI, and then the range breakout strategy that I taught you guys just now. Very, very simple stuff. Okay. Yep. All right. So that's the end of our session for today. I hope you guys have learned something new and also can practice. I would say for low volatility conditions. Eh? Sorry, Sabu, what is this? ATR percentage rank. Is it that one? Wait, let me see. No, it's not this one. It's not this one. But it's something similar to that. Yeah. Crap. I wish I could find it. Yeah. But anyways, okay. Any last questions before I end off the session? I hope you guys have learned something new. And also, I think this is a very, very simple strategy for you guys to test out. And also, this is like the strategy that can easily pass your prop firms and all that. Yeah, it's just a very, very simple strategy. You identify the consolidating range. It's basically these three things, right? If you go and learn about accumulation, manipulation, distribution, this strategy can use on high volume. Of course, of course. Like if I were to show you for gold, right? You see for gold, this thing is something simple like this, right? If I were to go to 15 minutes, right? I mark out the high, the low, then I just wait for it to pull back. If it's not very clear on 15 minutes, you go to 5 minutes. But usually I won't go to 5 minutes because it's too much, too messy. Right? Something like that. Oh, right. Sorry. Sorry, guys. Oh, okay. Can see? Yeah. So like something like gold, right? Wait, just gotta make sure I'm sharing. Okay. Okay. So let's say for gold, 15 minutes. If I would see something so choppy, right? Find those very, very choppy ones. Like something like that. Find those very, very choppy kind. If let's say we are, oh, if let's say we are right here, mark out the high, mark out the low, you wait for the break, break already, you see this green candle? This candle, green candle break already, come back down. But what you are looking for is this, right? You are looking for this. See, rinse and repeat. Rinse and repeat. I don't even have to do what back testing and all that. It's just rinse and repeat. If you scared, you can take this whole thing. Then your long position, put here, put here. Target. Where should you target? Look to the left. Always look to the left. Right? This is where you want to target. Correct? This area. Don't put it at this week. Okay? Because gold usually like to do funny business. All right. So put it here at the body. All right. This is your area that you should target. Sorry, my voice a bit coarse right now. Okay. This is the area you should target. Okay. What is the One is the 1.99. Perfect. Done. Right? Don't do something like that, please. All right, do something like this. Okay. Then is this in session? It's not in session. This is Asian session. Usually for me, I won't enter lah. If you ask me, like honestly speaking, Asian session, I tend to avoid. I usually avoid Asian session. Then we have something like this. Let me see. Yeah. So very, very, very simple stuff, right? Okay, let me show you guys. Okay, you see it right here. Now, if I start to do something like this, right? Start to mark it out. Start to mark it out. High, low, start to mark it out. Okay, this for gold. Okay, let's see how this works. Start to mark the highs and the lows. Okay, then we start to see whether we have a break towards the upside or the downside. Okay, then you practice. This is gold. Okay, for those who are inside here right now, like Cleon, Meng Leong, and Sabao, right, and the rest, right. Okay, so this is what we are looking for. Okay, let's see how this plays out. Okay, all right, nice. Okay, thank you guys for tuning into today's webinar. Really hope that you guys thank you for paying attention and asking questions. It helps a lot and it helps to engage right with me as well. Yes, nice. That's what I like to see. Okay. All right. Remember to stay safe and trade safe. All right. Hopefully, you guys will be able to apply something new and to learn from that. Okay. So remember to thank you. Appreciate it. Okay. Thank you guys. I'll see you guys next time. All right. Bye bye. Take care.